I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Condo owners in the greater Vancouver area are struggling with their new property tax assessments. In some cases, they've gone up 52%. First of all, could that number ever be accurate?
No, it's a real estate math impossibility. It is there's no way that an appraiser would ever come up with a 52% single year increase. It just goes to show you, as we talked about in your show before, Jim, about how flawed the BC e-value assessment methodology actually is.
What's the difference between the way properties are assessed in BC and in other provinces?
Well, for some reason, in British Columbia, the benchmark home myth, the benchmark home methodology used by the real estate boards seems to have gained some ground with the property assessment office. What I mean by that is that if you listen to their commentary when they're quoting house price change, often they're quoting the benchmark price. Now, that doesn't happen anywhere else in Canada. That metric is never ever used. Certainly the fact that the average selling price in Vancouver increased 1% in 2017 is not being reflected in an average 12% house assessment increase in their municipality for that part of e-value. So you've got your single detached luxury homes in Vancouver who they claim have increased, who've gone from decreases in value to increases of as much as 5 and 7% this year, where condominiums they're claiming have increased up to 30%. If you go out and look at the benchmark prices, those are mirrored. The reason the benchmark mirrors BC assessment is because they both used a flawed methodology that is rooted on the on it being a buyer side metric. Anyone who sits down with us for 10 to 15 minutes with the paperwork in front of them and gain a little bit of an understanding of house price myth quickly understands what we're saying is the truth. And that's what you're talking about right now. It is impossible for house prices to increase 50% year over year. Anyone who has a property assessment who has gone up 50% in British Columbia year over year needs to file for an assessment because they will win. Now, the beautiful thing about condos, Jim, is that generally everybody in the building gets these bad assessments at the same time. What I don't understand is why an innovative property appraiser out in British Columbia doesn't decide that this is going to be a good business model for them and for them to offer their services to all of the people that live in the condominium building in terms of getting their taxes reassessed. I can tell you that within 30 seconds, when the data is sitting in front of me, I can tell you whether or not your assessment is correct or not. It is not a complicated process. It is very quick. There may be an outlier that might take me 2 minutes to understand, but regular properties, I'm looking at about 30 seconds. That's all it takes. So in your case in point, no, it is impossible for an assessment to go up 50%.
Now, are they including the sale of single-family homes in the assessment on the condo owners?
No, what I suspect you're referring to, Jim, is probably an older condo building. Now, your older condo buildings, the land component of their assessments is based on how tall the building is. In other words, if you're in an older building that is 10 stories tall, say a building built in the 1960s or 70s. Yet buildings are going up around you on vacant lots or torn down older condominiums, and now they're going 30 stories tall. The land value that your condominium is sitting on, from a strictly development standpoint, is probably worth about 2.2 times more than what it really is. In other words, they could tear your building down, build 3 times the number of units in the same amount of land, which would equate to about a 2.2 times increase in the property values. Now, your listeners have to understand, when I'm quoting these, rattling these numbers off the top of my head, I'm not talking about an individual piece of property. I'm not talking about an individual development. I'm just speaking, generally speaking, from the things that are going through my head as I'm talking to you here. These are the sort of numbers that are automatically popping into my head as I'm talking, because I'm looking at other developments that I've watched over the years where this has taken place.
So, Ross, what's the key strategy here?
Well, there are already an appeals documents on the BCE eValue website where this specific thing was planned for. In other words, when they first brought these eValue assessments in, the methodology, there were warnings from groups that these sort of things were going to happen in the future. It just takes a certain set of housing market conditions to trigger these inaccuracies. It's like the benchmark. The benchmark price was fine for the first 3 years of the current housing cycle. Once it went past the 3 years, the methodology is not designed to work in that long of a period of time. There's usually a correction that takes place that wipes out some of the error, so the benchmark never looks as bad as what it really is. That's the same thing with these property assessments. You've got a trading cycle that has gone on too long, a historical length, more than double the historical length, or almost double the historical length in British Columbia. So that's where these methodologies no longer work. You need to use the existing documentation and complaint process to start out with, because it's cheap and it's free. They specifically itemize in the complaints process when your property has been overassessed based on land value increases. And then you also have the ability to look at sales in your building, which I am assuming that the person you're talking about that talked about a 50% increase, that their building did not have any sales that took place that were 50% more. Or if they did, the sales were less than 2% of the number of units that are in the entire condo building. Your property assessment is based on normal market conditions, where the seller and the buyer are battling on a level playing field. The playing field wasn't level in British Columbia from about 2014 forward. So you had about 2.5, 3 years of an unbalanced playing field. That unbalanced playing field relegated the methodologies for assessment, benchmark price, all that other sort of nonsense. It threw it out the window because the ground rules had changed. And that's what you're talking about here.
I know when we talked about assessments before as well, you said, well, only the top 10% of properties sell. So if you haven't put in a new roof, in this case, new carpeting, new walls, repainted, new appliances, your apartment for sure cannot be worth that amount of money.
100%. But the methodology is not built for that. I think if you talk to the people in this building, Jim, you'll find out that nobody visited their building. You will find that there was not a representative BC assessment that came through all the units in the building. These are just arbitrarily done by the process. Last year, when we first warned about this on your show, and I think it was January or February, we first warned about this on your show. We had warned about it the previous fall that it was coming, and then I think it was January, February last year, we first warned about this. What we said was, the way that you stop this nonsense is everybody in British Columbia files an appeal, because you're going to flood the market. They don't have enough people to deal with it. They're going to have to come up with a better solution. Of course, what we recommend, 9 out of 10 people are not going to listen to us. Only 1 in 10 listens to us. But if it's me and I'm in a condo building and I've watched the assessments in my whole building have gone up 50%, I'm demanding all of the units get assessed by an actual representative of BC Assessment.
We'll have more with Ross Kay right after this.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Ross Kay. Ross, House Street listeners are worried that the new year might have a collapse in the real estate market. Do you see things getting that bad?
Okay, so, I mean, I've heard so much of this nonsense for so long, Jim. People who use false terms, undefined terms, fear-mongering, to lead regular Canadians into making the worst financial decisions of their lifetime. I mean, a house is the biggest financial investment financial decision that you will make. There are no bigger ones. You may be part of that 1% of the population who gets super wealthy in the stock market. Other than that, your house is what matters to you. The Canadian housing market, the British Columbia housing market, the Ontario housing market, these markets have all been contracting for a long period of time. A contraction is the first change that takes place in a market. In the case of the Canadian market, members on the Wealthy Homeowner website, I'm not trying to sell anything here. They have known the Canadian market has been in a contraction for the last 13 months. That's right, listeners. Over a year, the Canadian market has been contracting. In January, the Canadian market will move to a correction. Sometime, possibly 4 or 5 years from now, we could call a crash or a collapse. But that's the length of time that is needed before these things get fully hashed out. Now, most of your listeners are not familiar with what happened to the Ontario market back in the late 80s, early 90s. But that's exactly what happened back then. The markets began to contract months and months in advance. At the same time, real estate agents were out there telling everybody housing prices were increasing. What they weren't saying is the market was contracting. And a market has to contract before it starts to correct. A contraction for our firm. How do we define these things? And your listeners are encouraged to go out and Google and try to find what I'm telling you, because you're not going to find it in any academic research anywhere in the world. A contraction is when a housing market starts to slow down. And it takes a long period of, generally speaking, a long period of slowdown in a market before it reaches a point where prices begin to correct. What are correcting prices? What is a correcting market versus a contracting market? Depending on where you live and the type of home that you're in, that home is expected to be appreciating each year at a given annual rate of increase. That given annual rate of increase changes every year. Now, there's several metrics that we use to measure real house prices, but that's exactly what I'm talking about here. The real value of your home is expected to increase every single year. When house prices are not increasing higher than that real house price gain should be, you're actually correcting. So in the Canadian market, right about now, about 3 days ago, the Canadian market got down below 4% year-over-year gain over the last year. That meant the Canadian market had entered a correction under the terms that my firm uses to measure housing markets. What that means is that across Canada, all the homes combined were no longer, the home buyers were no longer paying a high enough price that the existing homeowners could get their money back out. Now, real home prices are simple to calculate, but it's a complex calculation that you have to go through. So in other words, it's not just like you say, well, house prices are supposed to go up with inflation. That's another myth. You know, we debunked that myth like 7 years ago. We didn't believe anybody believed that myth, and that's another myth that's well known. Oh, your house is going to go up with inflation. No, that's not true. Your house should go up way more than inflation, because inflation is only one component of real house price change. So the housing market in Canada has been contracting for 13 months. The reason we knew that the Vancouver market was rolling over before the foreign buyer tax came in back in 2016 was that your market had already been contracting for 6 months, which I think if you go back and listen to the old shows, you'll hear that that's what we said in your show. We're laughing at everybody when they're saying about how these record prices are being hit. At the same time, the market is contracting. Of course, record prices hit at the moment a market is contracting. Of course, that's what has happened, because that's what's called peak pricing. Peak pricing happens in each different category of home at different points in the trading cycle. That's just the truth. And that's what this question really goes back to, Jim. Is the Canadian housing market going to register a collapse? No. The market has been contracting at the national level for 13 months. We are now into the 14th month. It crossed into correction about a week and a half ago. Okay? Our data shows that the housing market entered a period of correction about 3.5 weeks ago. That correction has to take out so much surplus in the current average selling price. I think it was $509,000 was the price held up by the Canadian Real Estate Association, posted on CMHC, used by the Bank of Canada, used by all the major Canadian banks, and used by StatsCan as what the average Canadian home is worth. About $509,000. Okay? A large percentage, over 30% of that amount is house price illusion. It's built on selling prices being paid by buyers that are way higher than what the real value of that home is worth. So all of that surplus has to be taken out of the market during the correction phase. The moment when the selling price, so that the moment when home buyers are able to purchase a home at below its real value is when a crash or collapse is recorded. In Ontario's last correction, this took almost 7 years before it really happened. You hear all of these comments about, oh, housing prices have dropped 20%. No, that isn't the truth. That's another lie. It's another myth. It's another misrepresentation to the public. No, the housing prices didn't drop 20%. The shittiest houses in the neighborhood, yeah, for sure, they dropped 20% overnight, but they were never worth what they were selling for. The rest of the houses, it takes months and months and months and years for those houses to fall in price because nobody sells. This goes back to what you discussed in the previous section, Jim, about house prices, and you made the comment about only 10% of the houses sell. Okay, what your listeners need to understand is this. Last year, there were about 1.2 million homes put on the market by realtors across Canada. About 1.2 million houses were available for sale. Only less than half of those homes sold. Less than half. So even though there were only 1.5 million of the approximately 13 million homes that are out there listed for sale, 1/10, less than one half of that tenth that were for sale sold. Now, do you think they were the best homes that sold? Or do you think they were the worst of the 1.2 million that were for sale that sold? I know they were the best homes because Canadians aren't stupid. Canadians buy the best home they can for their home buying dollar. So a market goes from it begins to contract, which the Canadian market has taken place now for over 13 months, which gave people, if you had all of this advice in front of you, you had a full year to deal with this issue if it's going to be a problem for you. You knew a year before everybody else in Canada that the housing market was already contracting. Now the market has moved to a correction. And it's already below 3.7% annual rate of return, which for Canada in the last year equals a correcting market. So a collapse, you're going to have to wipe out about 26% of the national average purchase price will have to be disappear. And the reason it's 26% is we are going to have, each year that it goes on, the real price goes up. So you don't have to wipe out 40% of the house price gain that's there today. In other words, you don't have to lose $200,000 in the national average selling price for a correction of 40% to take place. All you got to do is wait 5 years, and a 26% correction ending 5 years from now was the same as a 40% correction that happened overnight today. Happened overnight today. That's interesting wording. That's what your people have to understand. When we come on your show, Jim, and I talk about real estate math, and I talk about things being black and white. I talk about how real estate is the best financial investment any Canadian can make. I say those things knowing full well a correction is going to happen. I say those things full well knowing the perspective I'm looking at is 25 to 40 years. If you had purchased your property in Ontario back in 1990 at the peak of the market, today you're in really good shape. That was 27 years later. If you wanted to hold on to that property for 8 years, you were in big trouble. You lost a ton of money. Now, I'll also tell you there's a rental component to all that, so it really was not as bad as everybody made it out to be. But this is how housing markets function, people. Your listeners need to understand what I'm telling you has been repeated time after time after time after time. The pattern is always the same. It never changes. Every single time it happens, a bunch of economists, academics, realtors, bankers, everybody makes the exact same mistake. But the pattern never changes. The only thing that changes is the length of time the pattern takes to evolve.
We'll have more with Ross Kay right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Ross Kay. Ross, quickly, what's your view on household debt this year, and what do you see on the debt horizon? Because we keep getting all these warnings from international organizations that Canadians are the most in debt people in the world, and so obviously we must be headed for a horrible disaster.
Okay, so household debt, which to us we focus on the mortgage debt component of household debt, Jim. So our focus, my firm, Roskay Realty Consultants, our focus is on the mortgage portion of household debt. That is where we are experts at. That is where our forecasts are 100% accurate because they have to be. Now, what I am able to tell your listeners today is what our institutional investors were told last year. Well, way last year, starting last May. Household debt in Canada has been slowing at such a rapid pace that the GDP, mortgage debt to GDP, household debt to GDP, household debt to income. Now, the mortgage component of both of those two metrics, the ones that appear in the newspapers every single day by hundreds of different ratings agencies, banks, economists, academics, everyone. These are the two metrics they look at. Those two metrics will have recorded a decline. In other words, household debt to GDP and income to GDP, household debt to income will both decline in the first quarter of 2018. They will both decline. Now, everybody is saying, what's he talking about? They're declining. Everybody's saying that they're just going through the roof, that they are going to decline. Now, here's the big news. That's 8 months old news, folks. 8 months ago, we told our institutional investors that household debt measured through GDP and income, those ratios, would decline in the first quarter of 2018. So they had that much advance notice because those metrics are measuring the market that far behind. Even when I'm telling you today that they're going to they're going to get recorded as decreasing in the first quarter of 2018. Even that statement is behind the times. That household debt that's going to be recorded. It's already recorded. We've already recorded it. We've counted it. It happens well ahead of what's going on. And because the housing market is on a path that you cannot change, when people talk to us, we're always looking for analogies. How do we give an example of a housing market? And the easiest example is to picture an ocean liner. It takes so much effort to get that ocean liner going. There's so much energy that goes into that ocean liner to get it going. It's really, I think it's somewhere around 70% of the fuel is consumed, speeding it up and slowing it down. Well, a housing market is exactly the same. To get that housing market moving forward, it takes so much of the economy, so much capital, so much activity goes into getting that market going. It's unbelievable. Once the market gets going, that boat is on a path that it will not change. You can pull the rudder to the left and to the right of that ocean liner, and it's going to take miles and miles before that boat will turn. That's exactly the same as the housing market. We know the inputs that are made to that rudder miles ahead of the boat starting to turn, and we're recording those. So this is part of the reason why we're able to time the market and why people don't have to worry when they're listening to our advice. There's no anxiety. All you have to do is listen. Sit back and listen, because what we're saying is impossible to be wrong. Now, I guess we could have a asteroid hit the world, and that could make the word impossible possible. I guess the Canadian banking infrastructure could collapse overnight because all of the bank presidents took trillions of dollars out of the country. I don't know. I guess that's possible, but it's not going to happen. And a housing market is the exact same thing. So household debt to income, debt to GDP is going to drop in the first quarter of 2018 because it's already dropped. The Bank of Canada went ahead and issued this rate increase saying that they're worried about household debt when household debt is already dropping. Mortgage debt is already dropping. And if the bank isn't really careful, the mortgage debt is going to drop at such a rapid pace that false prophets, soothsayers of the housing market will claim the housing market is crashing. It can become a self-fulfilling prophecy. People start to believe the myths, as they did in the United States. The United States housing market, everybody believed that it was a subprime mortgage market for almost 10 years. Back in 2013, we were on with Garth Turner, where he published our surplus over sustainability chart way back then. We told everybody that's not the truth. It was just how the housing market functions. It has nothing to do with subprime debt. Starting last year, all of a sudden, the economists started to debunk the subprime mortgage crisis. Even though it's in all the textbooks, it's on WikiLeaks, it's on Wikipedia, it's in thousands of publications online, the ones published recently all say, wait a second, it wasn't a subprime mortgage crisis. It was just the housing market. That's because these things go in cycles. You can't change them. Household debt will fall in the first quarter of this year. No, I'm not a genius. This has already taken place.
Ross, can the government assist in making housing affordable in 2018 and beyond?
Okay, so that is a very, very easy question to answer, Jim. And it's easy in the sense that politicians are so ignorant to what makes housing prices go up that I can answer no. Your governments today can do nothing to improve affordability. The only thing that improves affordability is a correcting housing market. A correcting housing market corrects the market, and it does it every single time. There has never been a housing market that didn't correct, because if that didn't happen, everybody would know about it. Every single housing market corrects. The magnitude of the correction is where the damage is done. Do you have families who go into foreclosure? Do you have economies heading to a recession? That's where what happens when governments begin to dabble. Because what the government thinks is improving affordability, generally speaking, makes housing prices go up. What are you talking about, Ross? If we build an extra 2 million houses in British Columbia, housing prices would drop. Well, first of all, you're not going to build them because nobody will buy them. So unless the taxpayer themselves funds the government to build them, they're never going to be built. So let's take it down to 200,000. No, if you build 200,000 new homes, the average value of a British Columbia home goes up. That's how it works, folks. What's a real laugher here, Jim, is that we look at the United States. So part of our process when we're talking with the Canadian housing market is we're trying to look if we can expand in the United States. Is there enough? Can we get enough data collected? Can we form a network of data collection individuals like we have in Canada? Is that possible? But we can also say that the Fed, the American, the local feds, they have data that's available that we can use. Their data is accurate enough that we're going to be within a 5% margin of error. That's how easy it is to measure a housing market. We are going to know when their housing markets are going to move, probably 6 to 8 months instead of the 12 months that we have in Canada. That information is out there. the U.S. governments produce a little bit more information than the Canadian governments do, and the Canadian governments now it's impossible for them to collect this information because years have gone by. It had to be collected at the time it happened. In the United States, they collect square footage of the houses that are being built. That's right. The builders report the square footage. You can look at the United States and you can see back in 2000 that 15% of the homes built in the United States were under 1,400 square feet. You can see in the United States that in 2017, less than 5% of the homes were under 1,400 square feet. Obviously, if you're building bigger and better homes that are worth way more money, house prices on average are going to increase. You've just been deceived, people. Your listeners have just been deceived because of the ignorance. The reason we calculate real house prices is so that we know how much room is there to correct. It doesn't mean you don't buy a house. It just means that on the day that you're buying it, you know how many tens or hundreds of thousands of dollars in the price that you're paying potentially could correct or will correct, but it could take a decade for that to happen.
Ross, thank you so much for chatting with us.
Hey, thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from the wealthyhomeowner.ca. You're listening to HoweStreet.com radio. Any questions for our guests or the show can be sent to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of House Street Media Incorporated.